In recent videos, I talked a lot about the $100,000 front run of Bitcoin, why this could happen and what it would mean for Bitcoin. Well, here, a few weeks later, we can see it did happen. A 0.2% front run of Bitcoin, so around $225. We got ever so close, but $100,000 across our big major exchanges not taken out. After that, we can see a $9,000 drop to the downside. That is almost 9% drop. So a very significant move down. And now the question on everybody's mind is going to be, is this it? Is that the high end for Bitcoin? Are we not going to be breaching $100,000? And we are, in fact, heading very much down from here. Or is this just a healthy pullback within an overall bull market uptrend, and the next attempt we're looking for that big breakthrough? Well, I'm going to be sharing with you in this video my thoughts, opinions, trade setups, what's happening with the market structure, with the order flow, and giving you a very in-depth view from the technical analysis perspective. So from a real trader's mindset, what is the next highest probability outcome? We have been very good at predicting some of these moves. I'd like to start off with some of those predictions and general thoughts about what happened here at $100,000. So hopefully you are also not only subscribed here, but following along over on Twitter or X now, because I've been giving quite a lot of thoughts over here while I've not been on YouTube videos. And I shared with you this post about Bitcoin to break or not to break $100,000. But a very important piece of the puzzle was this voice message that I do want to share with you in this video. But this was on the morning or afternoon of the 22nd. And we were, of course, trading right here around $99,000. And I put this poll out to the champion members. Is Bitcoin going to break right now or within the next 7 days, or are we going to drop down to $86,000 first? That was the poll. And I told my team, would changing my vote or would knowing my vote change your vote? Some people yes, some people no. And I gave the spoiler for those that wanted to know. And I actually voted for a drop first. So like I've been talking about on the YouTube videos, but my thought process was this $100,000 front run. And rather than breaking it right now or within the next week, we're going to get that drop first. And of course, here you couldn't hear it, but I just want to just share a little bit of my thought process from what I shared in this voice message. So this is just 1 minute long, just to get some insights into what I was, predicting or looking for prior to, this move to the downside. This is going to be interesting for you.
I don't know. I just feel like front run of $100,000 is going to be Max Payne scenario. And I'm not like a bad guy. I don't want Max Payne, but I'm saying that the market does like to do that, right? So it just feels like this slight front run of 100K. Everybody's already celebrating. Everybody's already super happy. They really believe 100K is going to be guaranteed in the next like 24 hours, like $400 away from it. That's as tight as it can get. So if we are to drop, lots of people caught offside, lots of people missing their take profits, lots of people missing their shorts. It is just this play out which would cause a lot of pain for the market.
So basically, I want to expand, it's if we do drop here, and that's the that's the play out I would like to see, and we front run $100,000. What I was saying, a lot of people miss their sell orders. People are wanting to sell above 100K. A lot of people wanting to short above 100K. So essentially, with the front run of $100,000, really, I mean it, like 99% of the market are going to get wrecked. And that's what I mean here. Like 99% of the world are going to have that Max Payne scenario of the front run, but not the champions. We are the 1%. We were looking, or I was looking personally, for that front run. I felt it was like this, Max Payne scenario where really 99% of the world are missing out. They're not expecting this. The 100K celebrations had already begun. So it's kind of a funny one that we front run it in the end by a few $100. But let me expand a little bit more upon this. So this was still prior to the swing failure pattern that we were seeing, or were yet to see. So at the time, we still were having the high at $99,666, but we pulled back to a local naked point of control. At the time, okay, even though we're looking for the front run, we still got to trade the charts, and that gave us another compound on our long. So this was the long trade that I was in at the time, no longer, but nevertheless, had already locked in over $1,000 of profit, and I had compounded it again at the daily naked point of control, looking for another new high to be made, following along with that trend. At the time, there was, no reason to expect anything other than still continuation. I had my personal bias, but I would, of course, trade the charts. So compounding on the daily naked point of control that we pulled back to, this was the correct decision, as in the end, we go on to make another brand new high, another brand new all-time high. Okay, so this is how then that played out. From that compound, we go on to make another brand new all-time high in the night of Friday, ending in a swing failure pattern. So this was a funny one. The CME did breach $100,000. So that is something to pay attention to. $100,000 breached on the CME, but not across our what I'd call our major exchanges. So your Binance, your Bybit, your Coinbases, your Bitstamps, etc., like across our major derivatives exchanges, spot exchanges, not taken out, actually ending with a swing failure pattern. Okay, let me just mute this a second. It's already mute. So yeah, essentially front running $100,000 with a swing failure pattern, but it was taken out on the CME, and that's something important. So just to, I don't want people to get lost here, just to follow along on what we were going for. I did look for 100,000 front run. I felt that was the max pain scenario. Okay, that was in the morning, afternoon of the 22nd. We then, as we approach around New York Open, we get the pullback to the naked point of control. That is a compound of the long trade that I'm in. Then in the evening of the 22nd, we get the swing failure pattern. Okay, so upon getting this swing failure pattern, for me, that is a simple short trade. This was a funny one, but we get into memes. So you can see here the timestamps, 7:30 on the 22nd of November. So, this is as it's happening. Swing failure pattern, kind of simple stuff. Swing failure pattern of the highs, right? CME breaking $100,000, swing failure pattern on Bybit, and confirming to my team that for me that is a short trade. And look at this, by the way, that's the long trade entry from 36,000, and this is my swing trading account, my main account, and then a short from 99,500 after that swing failure pattern. So yes, that is really simply of those two prices. That is the long trade, that is the short trade that I am in right now. And the stop loss for me was simply above $100,000. So stop loss, we're getting asked, what's the stop loss? $101,000. So really simple, the trade setup there. It's a short trade based off of a swing failure pattern, off of that on being happening on Bybit. We did grab the liquidity on the CME, Bybit ending in a swing failure pattern, and really simply my stop loss above $100,000. That was all happening on Friday night, as you can see. Around that Friday night is when we were getting in those short trades after the swing failure pattern. And fast forwards to, the 25th, so this will be Monday. What actually happened here on Monday is you had a little bit of extra confluence, or let's just say this is where you had a bit of a better short trade lineup. I was still short from the swing failure pattern here on the top of the fifth wave. What you actually then saw over the weekend was a drop in price that left a CME gap. So this on the right is our CME chart. We had a gap on the CME, which was filled, while simultaneously Bitcoin was hitting a daily level that was printed. So we come up into take out $99,000 on a back test, which hit the daily level while simultaneously forming the CME gap that had filled after the weekend drop. On top of that, on the day, we had a bearish CCV setup. And even more on top of that, we had a Fibonacci time pivot for the 26th, but I would always give that a day either side. So we had a lot of spooky to confluence, the hidden bear ghost play on Monday. And that was, the rejection off the daily, the fill of the CME gap, the Fibonacci time day, and on top of that, we had the bearish CCV setup. So we had a lot of reasons on Monday for the drop, especially once we got that acceptance, mainly, to be fair, once we got that acceptance below the previous day value area high. We saw our acceptance below, and then we got that big drop to follow, which was during this section of the chart, okay? So from Monday. So a few things to bear in mind here, okay? So that swing failure pattern from the highs, which was front running across our major exchanges, $100,000. You had that bearish CCV setup, CME gap fill onto the daily resistance. The signs were there for the drop, right? Undeniably, those signs were there. And then, as I told you over on X, I want to see at least 92,500 next or lower. So this is while we're still trading around, 95k ish. I wanted to see a further drop, and just keeping that plain, simple, and clear for you all. Still in that short trade, and this was funny back on the 13th of November, saying about the $100,000 front run to Michael Saylor. But it's really nice to see, people also following along, understanding about the front run. They had the same plan, but this is a nice little bit of confluence. So nice to see a lot of people able to also profit from that idea. And this is what I mean by the $100,000 parties. And if you follow this, the Averse Kramer memes, but just take a listen to this that was also being posted while we were ever so slightly before $100,000.
All I can tell you is own Bitcoin, that's a winner. And that, ladies and gentlemen, is the conclusion of the lightning round. We got MST.
Oh, sorry about that. I was still on mute. I was going to say, this guy's a meme. Essentially, he gets everything wrong. We're going to be focusing on the technical analysis with the champions who seem to be getting everything right. So I wonder who you want to be listening to. So we're going to be going over now. I've done the first part of the video, what's happened, why, some of the reasons, and how we predicted it correctly for that drop to the downside. Now we're going to be going over into the next part, which is what we're looking at next. Okay, so what's next to come? Really starting off with, I suppose, the low that we've put in right now. And that is off of pretty simple theories when you understand how and why we trade at Chart Champions. So this is the previous range point of control. So this was our previous range. We broke out of that range to form a new higher range. And then we obviously broke back down. So if you cannot recognize this, this was our range low. This was our range high. We form our range here. We break down from that range. So now from this range, we go back to the previous range. Could even potentially be one bigger range. You can see where we've bounced off of here. It is the previous range point of control. So that previous range point of control has currently offered support for a bounce. So if you do not understand why we are bouncing from where we are, it is really simply the previous range point of control. Very important level when it comes to the charts. And that is what we're bouncing off of right now. So now you know. That then gives us what are we looking at next. So a few things to bear in mind, of course, when we zoom out and we look at this on a higher term time frame perspective. I think it's fair to say we are still very much in a bull market. The trend on this daily term time frame is still very much up, and we have strength after strength when we zoom out. So sometimes, it pays to be on the lower term time frames, get a heads up before everybody else. But for a lot of people, it is... all I'm saying is you have to be a relatively good trader to take advantage of some of these short trades. For the average trader or the newer traders, it does help a lot of the time to zoom out. And when you take a zoomed out picture, you can absolutely view this still as bullish. When you start to zoom in is where some of the early warning signs are occurring. So let's come down to the 30-minute chart. What have we got here? Well, overall, we got that. Well, there was the swing failure pattern, by the way. So you obviously have the all-time high off of a swing failure pattern. That was the move down on the weekend. And this was the retest of the daily, by the way. So that was our daily retest while simultaneously we're filling the CME gap. Okay, so that's what happened there. After that, we had formed the swing failure pattern, weekend drop, retest of the CME gap, fill, while testing the daily level of resistance and also taking out these series of highs. So you had another little bit of a liquidity grab. But what we're emphasizing here is the all-time high, the low, the retest, which is giving us a high, low, lower high. At this point, it's not a lower high there. You have to understand this is an aggressive short trade because at that point in time, there's no weakness. Highest probability would be continuation. It's not until you break down here that then you get that confirmed market structure change, giving you a high, low, lower high. And at this point, you have formed your lower low. And we have gone on from there to go lower highs, lower low, lower high, lower low, lower high, lower low, and this is now going to be an important section of the chart, right? Are we to form another lower high and continue down within this channel type structure? Or are we actually going to get a break and a reclaim of $95,000 and then we can look for that bigger reversal? So it's going to be very important, in my opinion, how this goes at $95,000 where we do have a daily naked point of control. So yeah, for me, daily naked point of control is a big level here. I actually want to share something with you from a play trade out that we had yesterday of how wonderfully accurate and just best tool in the world right now, anchored VWAP. Anchored VWAP of the downtrend from the retest, 3, 2, 1. Bam. Look at this yesterday, how we absolutely pinpoint perfectly rejected from that anchored VWAP. I can show you a second in the Discord group how and why I was talking about this yesterday to the members. Because yeah, really it is one of the most powerful tools in the world. That was the retest of the anchored VWAP right there. And yeah, anchored VWAP so strong as we go from the retest to a little bit of the rejection to get it even stronger, to getting even stronger. And it ended, of course, making new lows in the end. So anchored VWAP, just don't forget about that level. I've talked about it enough though here. So yeah, anchored VWAP was a strong level yesterday. You still got it today, but up to... Let me just try and mute some of these sounds a second. Up to the 95,200 daily naked point of control. And that was previously, while we were looking at consolidation, also the point of control of that. That is now shifted. So we've got a lot of reasons to be looking at $95,000 and a lot of reasons locally to be looking, of course, at these lower highs printed. For me, they are very important. So a few things to bear in mind. Of course, when you zoom out, you're in a bull market. The market's very strong. When you start to zoom in is where you see these little cracks, little signs of weakness. But again, they can be invalidated like that if we get the reclaim of 95K, changing that market structure, getting it back above the point of controls there. Very important. Out of interest, let's just see where we got the overall point of control from around all-time high zone. I would say next important level. So just as you bounced off here, the point of control. Oh man, Discord is going to have to be closed. There we go. We got the bounced off the point of control, as you can see. We bounced off the point of control. You can still be aware, right, of the point of control here above us. That's coming in at around, let's call it 97,800. But yeah, the bigger level of the two would be 95,200 for myself right now. So that is what I'm looking at in terms of local price action. When you zoom out again, it's very bullish. If we are to see a further continuation to the downside, then that's where we'll be interested in this previous range, value area low. This for me is the bigger target, bigger level that we have on the chart right now. That's also because we got in here a daily. And that's coming in at around 87,000, let's call it 87,500 on that little bit of a zone. I would have said, by the way, when I'm talking about 86, 85, that's all within that zone of when I was answering that on the poll. But yeah, I'd really say 87 to $88,000 is the biggest support. Not really, to be fair, 86, but all within and around that zone it was, and that's what we were looking at the time, that previous range value area low retest. So that gives us down to the lower daily. So yeah, really what I would, giving some tips and tricks, I suppose, to wrap up the video. A few things that I would like to bring your attention to. And first and foremost is when it comes to taking short trades in this market. I have taken a few short trades during this section of the last bit of the uptrend. Of course, during this section when I took a few shorts, they did end in profit because it was on, I took one, I can't even remember now, I took one around a fake out of one of these highs. But what you need to do is you need to take that profit quick and, have your stop loss in place. Because even when I shorted this swing failure pattern up here, I still understood the highest probability from the charts is that I get stopped out. Well, the trade in the end has worked out relatively well, right? It's got a $9,000 drop to the drop side. But while you're taking that short at a time, you have to understand it's not an extremely high probability trade. The highest probability is getting invalidated and stopped out. You are trading very much against the trend when taking these shorts. That's not something you should be scared of. If you have a good trade entry and a good invalidation, I think, well, I would anyway, I would still take that short trade. Some people are going to laugh at you. Some people are going to say X, Y, and Z about it. But if you've got your trade set up, if you've got your good invalidation, block the noise, block what everyone else thinks or says, just trade the charts. Even in a massive bull market, you can take some winning short trades. Okay, I remember, prior bull markets, go zoom back to bull markets of 2020, 2021, this uptrend during 2021 once again, even this move in 2023, I made a lot of short trades and I ended very profitable in these bull markets while taking short trades. There's a time and a place, of course. If you remember, from 70,000 to 90,000, I was always saying no short trades at all. This is ultra bullish. But as we come closer and closer to 100K, of course, we're still under low probability trades, but we have been able to take advantage and, make profits on this move to the downside. Also gives us that peace of mind, right? We have that peace in ourselves of knowing, well, if this does get a big reversal, we're not scrambling for the exit door. We're not, frustrated about missing profits. I do believe a lot of the world right now are a little bit, kind of frustrated, clueless, not understanding what's happening next. Well, we can have that level of peace and relaxation of saying, well, we have that short now from the high. We can let it run. If we start to see signs of strength, yeah, we can get out of those shorts. But until then, we can actually have a little bit of peace with a pullback and view that as another long the dip opportunity. So I'm not an ultra bear, even though I was saying this, got the bear outfit on, but I'm not an ultra bear. I'm not a perma bear. I happily will make money on the rises to the upside. I'll happily long the dips. It's just I, as a trader, love to have a short from the high and a long from the low. That way, I can hold my short while we're in this kind of scenario. If I see the sign of strength, I can close the short, let the long run. If I see the signs of weakness, I can close the long and let the short run. It's a very advantageous position to be in, and you can be in the same positions as me. If you follow along, listen well, educate yourself, you can, like some people have been commenting, right, over on Twitter, then, you can absolutely foresee the trades as I foresee them, because I teach you everything that I know, all my knowledge, insights I share. And I will say this, if you're interested in that within the Discord, being aware and made, highlighting to you at the time I'm taking the short trade, swing failure patterns. This is all happening on Friday night. Of course, right now we do have the Black Friday sale. This is up to 30% off, and this is for the longer term memberships for the champion and the contender. But that's up to 30% off, and that obviously ends in a few days. So if you want to take advantage of it, well, you really should get in right now. So yeah, that's the Black Friday sale. It's active live right now, up to 30% off on the longer term memberships. If you're interested in that, then yeah, you should take advantage of it before the sale ends. It's a once a year sale, not run it every year, but it is the one and only time to take advantage of that. If you ever need any help or assistance with the sign-up process, etc., you can come over here, go into the help section, and you can actually have, enter your email. You can have a conversation with customer service. They will also have live chat available there as well. So yeah, that's just something I wanted to bring to your attention. And I will just wrap it off by saying I hope that you have enjoyed this video. Hope that you enjoyed the insights that I shared with the front run of $100,000, why that happened, why the move was so quick to the downside with these liquidations. The sign of strength level number 1, and then number 2 would be the point of control, why we're bouncing from that previous range point of control, and why the bigger level still does remain below. And I still would like to see that lower level hit, by the way, around $88,000. But I do understand if we change this local market structure, well, then that previous range point of control was too strong. If you want these updates rather than waiting a week on YouTube, instantly live in the time, well, that's where you get the advantageous position of being a champion member. You don't wait around, you get it live in the time from myself, the real-time updates. The first trading updates, the first insights will always be for the champion members. So with the Black Friday deal, now is the best time to take advantage of that. I hope you've enjoyed this video, hope it's made sense, and I do hope I've helped you out. Cheers, everybody. Thank you ever so much. That's me signing out. Goodbye.